Hello everybody, this is Opeyemi. Welcome to my Forex trading course. On this course, I'm going to be taking you everything you need to know about Forex trading. If you are new to Forex or you don't know anything about Forex trading and you want to know about Forex trading, this is the right video for you. So just stay put and just follow me step by step as I take you, and you will never regret watching this video. So let's go. So today we shall be taking on this outline what is Forex, what is traded in Forex, what the major currencies, buying and selling in currency pairs, major currency pairs, and finally major currency pairs or minor currency pairs. Now let's go. Today is lesson 1. So in the next video we shall go to lesson 2 and continue from there. So let's start. Now, what is Forex? What is Forex? Forex simply means foreign exchange. So when we talk about Forex, we are talking about foreign exchange. The foreign exchange market, which is usually known as Forex or FS, some people call it FS, is the largest financial market in the world compared to the measly, which is $22.4 billion a day volume of the New York Stock Exchange. The foreign exchange market looks absolutely ginormous with its 5 trillion a day trading volume. So that's to tell you how large the Forex trading market is. 5 trillion a day. So as people trade, you can see 5 trillion people trade every day from Monday to Friday, every week, every month, continuously. It's traded in large volume. It's a very large market. And so if you know your way, if you know how to trade, you will make your money in Forex trading. So just follow me. The next one is, now, what is traded in Forex? When we talk about Forex trading, what do we trade? What do we trade in Forex? What we trade in Forex is just money. When we talk about trading Forex, we are trading money. We are trading currencies of different countries, like the USA, the Europe countries, Germany, and so on. So we trade currencies, we trade money. So in Forex trading, when you buy, say, the Japanese yen, so you are basically buying a share in the Japanese economy. You are betting that the Japanese economy is doing well. So when we trade in Forex, we are simply buying and selling. So for example, you buy the Japanese yen. What you are doing is that you are buying the Japanese economy, hoping that their economy will improve. So as their economy is improving, people are buying and prices will be going up. So as prices are going up, so you can sell and make profit. That's how Forex trading works. When you buy, you expect the price to go up. You expect the economy of the country that you are buying their currencies to go up. because the stronger the currency of a country is, the stronger the economy. So when a country is strong, their currency will be strong. So when you buy the Japanese yen, you are expecting that the Japanese economy will improve, so you can make profit. So, and even get better as time goes. Once you sell those shares back to the market, hopefully you will end up making a profit. So when you buy the Japanese yen, you expect that it will go, their economy will improve. So once their economy improves or their currency improves or gets stronger, you sell it and make profit. So now, what are the major currencies? What are the major currencies in forex trading? What are the major currencies? Number one is the USD. The USD stands for US dollars or United States dollars. That's the number one currency in forex trading. Then the next one is the EUR. EUR stands for euro. That's the euro currency. You have the JPY, which is the Japanese yen. We have the GBP, which is the Great Britain pound. We have the CHF, which is the Swiss franc. We have the AUD, which is the Australian dollar. Then finally we have the NZD, which is the New Zealand dollars. Those are the major currencies traded in forex. Now, buying and selling in currency pairs. Forex trading is the simultaneous buying of one currency and selling another. Now, in forex trading, we have what we call currency pairs. Two currencies will be paired by each other. Currencies are traded through a broker or dealer and are traded in pairs. For example, the euro and the US dollar. Look at this. The euro stroke the US dollars. So these are what we call currency pairs. EUR/USD. It means the euro/US dollars. Or the British pound and the Japanese yen. GBP/JPY. So we pair two currencies in order to buy and sell. Let's say, for example, euro/US dollars. You buy. You click on buy. So what you are simply doing is that you are buying euro and selling US dollars. So in the same way, if you click on sell, if you sell euro dollar, it means you are selling euro and buying US dollars. Now, when you trade in the forex market, you buy or sell in currency pairs. Exchange rate fluctuates based on which currency is stronger at the moment. So the exchange rate goes up, it goes down, it goes up, it goes down. So as it's going up, when it goes up, it means one currency is stronger, the other currency is weak. So the direction it will go is determined by the strength of the various currency. So for example, if the euro is strong, let's say euro US dollars. If the euro is stronger than the US dollar, That means the exchange rate will be going up. Why? Because of the strength of the euro. Now, what are the major currency pairs in forex trading? When we talk about trading in forex, we trade in pairs. What are those currency pairs? The major ones. There are so many, but we have the major ones. The currency pairs listed below are considered the majors. These pairs all contain the US dollars on one side and are the most frequently traded. The majors are the most liquid and widely traded currency pairs in the world. That's why they are the major pairs, because they are traded all over the world. They are the most liquid. They are the most widely traded. And they are the euro, US dollars. That's the number one, euro, US dollars. That's why if you check every broker, because before you can trade forex, you need to trade through a broker. You check all of them, the euro dollar, the spread is always very low. Why? Because it is the number one major currency pair. Then the next one is US dollar, Japanese yen. After that one, we have the Great Britain pound, US dollars. We have the US dollar, Swiss franc. We have the US dollar, Canadian dollars. CAD means Canadian dollars. Then we have the Australian dollar, US dollars. Then we have the New Zealand US dollars. You can see that all of them contain US dollars. That's why they are the major pairs. Because you know the number one economy in the world is the US, the United States. So when everybody wants to trade in their currency, so any pair you see them, euro, dollar, dollar yen, pound dollar, we call them dollar, Swiss franc, dollar CAD, Australian dollar, US dollars, New Zealand dollars, US dollars. Those are the major currency pairs, and they are, when you see them, their price goes up, they are volatile. Their prices moves. They move very fast because they are volatile. The major cross currency pairs or minor pairs. So we also have what we call the major cross currency pairs, or we can call them minor currency pairs. Currency pairs that don't contain US dollars are known as cross currency pairs, or simply as the crosses. Major crosses are also known as minors. The most actively traded crosses are derived from the three major three major non-US dollar currency, which are euro, Japanese yen, and Great Britain pound. So they are the minor crosses are the minor currencies pairs. They are derived from those ones. They don't include US dollars. So there are those pairs that don't include US dollars. Now, the first one is Euro Swiss franc. Euro Switzerland. That's the country, Eurozone. Second one is Euro, Great Britain pound. That's Eurozone and United Kingdom. Euro card, that's Eurozone, Canada. That's Canada. You can see that they don't none of them includes US dollar. That's why they are called minor pairs. The Euro, Aussie, we call AUD, Aussie. Some people call it Aussie. That's a nickname for it. That's the Eurozone, Australia. That's the country. Then the last one, you have the Euro, New Zealand dollars. That's the country is Eurozone and New Zealand. So these are the minor crosses that includes euro. These are the euro crosses. They are euro minor crosses. They don't include the US dollars. Then the next one. You have the yen crosses. These are the yen crosses. Euro yen, that's Eurozone, Japan. So JPY is Japanese yen. So that's the currency of Japan. You have the GBP, JPY. That's Great Britain pound, Japanese yen. That's United Kingdom. You know JBP is spent by the United Kingdom. Then CHF, JPY. CHF is spent in Switzerland, stroke Japan. CAD, JPY. That's Canada and Japan. Australian dollar, Japanese yen. That's Australia and Japan. New Zealand, Japanese yen. That's New Zealand and Japan. These are yen crosses. They are minor crosses. So they are minor currency pairs. Then we have the pound crosses. These are crosses that include the Great Britain pound. You have Great Britain pound, Swiss franc, that's United Kingdom and Switzerland. Great Britain pound, Aussie dollar, United Kingdom, Australia. Great Britain pound, Canadian dollars, as United Kingdom and Canada. Great Britain pound, New Zealand, you have United Kingdom and New Zealand. Then you have the other crosses. You also have the other crosses. They are Australian dollar, Swiss franc, as Australia and Switzerland. Australian dollar, Canadian dollars, Australia, Canada. Australian dollar, New Zealand. The countries Australia and New Zealand. Canadian dollar, Swiss franc, as Canada and Switzerland. New Zealand, Swiss franc, New Zealand and Switzerland. New Zealand dollar, stroke Canadian dollars, that's New Zealand and Canada. Now, we also have some currencies that we call the exotic currency pairs. We call them exotic currency pairs. Exotic currency pairs are made up of one major currency pair with the currency of an emerging economy such as Brazil, Mexico, or Hungary, and so on. The chart below contains a few examples of currency pairs depending on your Forex broker. You may see the following exotic currency pairs. So it's good to know what they are. When you check your broker, your currency codes, you see the exotic. They are not too popular. They are called exotic because people don't trade much in them. So because people don't trade much in them, you see most brokers, their spread are very high, very wide. Even I don't trade exotic. I don't. So keep in mind that these pairs aren't as heavily traded as majors or crosses. So the transaction costs associated with trading these pairs are usually bigger. That's in their spread. The spread is the transaction cost. So once you click a trade, it will start with a cost. That's the spread. So, but with these exotic pairs, they are very large. It can be 10 pips, can be more than that. Now, look at the currency pairs. You see them, US dollar, HKD. What's HKD? Hong Kong. United States, Hong Kong. US dollar, SGD. United States, Singapore. US dollar, ZAR. United States, South Africa. So South Africa, they spend ZAR. US dollar, THB. That's US dollar, Thailand. US dollar, MSN. That's US dollar, United States, Mexico. US dollar, DKK. United States, Denmark. US dollar, SEK. That's United States, Sweden. US dollar, NOK. United States, Norway. So those are exotic pairs. These pairs I don't trade in them. Why? Because their spreads are their transaction costs are very high. So I ignore them. I trade the major pairs. So for now we shall come to the end of the class. In the next video we shall continue from there. We shall look at other things. So please like and subscribe to my channel and click on the notification button so that when I post another video, which is lesson 2, this is lesson 1, so that when I post lesson 2 you will get the notification. Yes, thank you.